So let's review today's price action. Today is Wednesday, 13th of May 2026, and this is how we looked at XAUUSD. So this is price action review for XAUUSD. So price opens around here. This is the new day open, NDO means new day open, and then comes up to give us these two bullish candles that sweeps this buy side liquidity. And then the next thing we see is price giving us market structure shift at around this area, confirming that we have a bearish bias. And now this gives us the concept, now we are using the concept of open high low close to trade the daily candle as a bearish candle. So this was now opening price around here, the information of the high of the day. So this becomes the assumed high of the day. I didn't complete that, of the day, like that. Yeah, so once we had that as a confirmation for the bearish bias for the day, now we have a market structure shift, and then we marked this fair value gap here. You can see this fair value gap. I think I can remove everything else so that we can just start off fresh as we continue. So so remove this. Yeah, actually initially you need to mark previous day's high, previous day's low. This is the previous day's high and this is the previous day's low. The reason you're doing that is because price is headed for one of these areas, either this level or this level, and if one of them is swept early in the morning, that means the other side is the one that becomes the target, and that is what happened yesterday. So today price opened here, gives us this week the assumed high of the day, market structure shift, leaves with a fair value gap right here, and this fair value gap is what becomes valuable to me at this point. So how do we engage in price at this point? So price retraces into this fair value gap and reacts with an engulfing candle right here. So this engulfing candle, or this engulfing pattern, gives us the range that we are going to use to frame entries. So that is how you mark that range using a Fibonacci tool. So what you want is price to come to the premium side of this range and then to drop. So we look for confluences that are within the premium side of this range where we will frame our entries. So going to the 5 minute time frame first, you mark where there was a change in state of delivery, and that becomes also an area of interest whenever you are framing entries. So this was my CISD. So you can see bullish candle, then bearish candle that closes below it, and that becomes your change in state of delivery. And now 1 minute time frame is now where we now want to focus on. And so the first thing that you'll notice is the areas of value that we usually use are weekly candles and RSI divergences. So weekly candles were, the first one was here and the second one was right here. So now we wanted price to come and tap into this one of these areas and then drop to give us that price moving downward. So that is, you can see price comes up and taps into this first weekly candle right there, and now that is now how we get that sell from there. And then we are targeting, let's say targeting, that is the first one, the first target, and then the second target was actually here. So this was TP1, and then was it this one really? No, it was not that one, but rather this one. This was the TP1 actually, and then the second TP, let me use a 15-minute time frame, that was clearer. So first TP was this and second TP was this order block right here. So order block and a pool of liquidity right below it, which is that relative equal lows. And now that is how we participated in this price action. However, you can see price hits our TP1 and then retraces. So the moment price got to our TP1, we had our stop losses moved to break even, and then we had this funny retracement that comes back up and wicks us out at this point. You can see that it wicks us out, and that is how we got out of this trade. But we had taken partials. That means those partials left us in overall profitability, as I will show you in the next few minutes. So that is TP1, and then price now keeps going lower after this retracement to get to our TP2, which is this relative equal loss, and this was 6.05. and then the ultimate, now the final TP was supposed to be the previous day's low. However, I don't usually, if you're that greedy you can wait, but I'm not usually that greedy. So my final TP would have actually been here, or take most of the partials, maybe 80% of them, and then leave 20% to run up to this area. And the problem is you never know if it will get there. So you can see, as you can see here, price retraced to come back to this level again and then dropped. So you can see now this second stop out is again a break-even stop out. So that is how we participated in gold price action today. That would have been my final TP if at all I had not moved my stop loss. Yeah, so that is what we did for the day. Let me look at the charts. Telegram. So this is the community. These were the setups now that I shared. Let me see where we had. So this was the buyer's call, and then the reaction, and then me framing entries right there, and then a weekly candle entry right here with first TP marked like that, and then this is for crash 1000. Then so you can see our first TP is hit and we get stopped out at break even. You can see break even stops, and then you can see price now kept going lower, and now we started paper trading it. So that is how we ended the day with the XAUUSD.